Hi, this is Jenny Clark with Solvability, and we're welcoming everybody to Freedom Friday today. Today we're having Mike DeVaux, and if you look behind his head, he's got a bunch of pilot stuff up in the corner on the top of his bookcase there. He's going to talk to us about Keystone Benefit Groups. One of the conversations we've had relative to COVID is there's some new rules that government contractors need to know. What Mike does best is help people understand what their benefits are going to cost, what they need to do to be competitive, and also what are other companies doing in the marketplace to balance that cost so that they can retain great employees but have a reasonable benefit package. So Mike, I think I warned you I'm going to interrupt you from time to time, so I'll kind of wave like that. I'm going to put you on screen, and let's go ahead and let you get started. Take it away, Mike.
All right, Jenny, thanks so much, and thanks for letting us, be part of GovCon and actually Freedom Friday. So, as Jenny said, we're an employee benefit consulting firm. So, what does that mean? We help clients with their medical, their dental, their vision. We also help them a lot with their technology solutions. We work exclusively in the government contracting space. So, I wouldn't say we don't have clients or we have a few clients that are not government contractors, but 90% of our folks are in the government contracting space, and we've got them from the startup all the way to what you would call that mature large government contractor with, thousands of employees and $1 billion of revenue. So the exciting thing is we've been able to help our clients kind of grow, keep their benefit costs in line, keep their labor allocation required to support those things, and basically make them more competitive. So I, kind of want to talk about some of the things we've seen in the marketplace, kind of where trends are going, and and I think for those that are getting started and maybe those that have a benefit program that are continuing to grow, I think probably the biggest reality is if you're in the services space, benefits are probably going to be your number 2 budget item behind your payroll. So some things you need to think about with that is like any large budget item, right, is not something you can just leave unchecked. It's something you need to look at, you need to revisit. You need to kind of have, checkpoints that you cross that says, hey, when I get to this point, I need to make sure I'm looking at my benefit costs. Because if you think about it, go ahead, Jenny.
Well, Mike, I was just going to say, we've gone through so much competitive pricing in the government contracting space, and there's been a real pressure on small businesses, especially, to cut their total cost. And everybody's got to pay people about the same thing to keep a good squad on. And then if you don't have good benefits, as soon as you turn around, they'll lean across the desk to the next person and say, what do you get for vacation? And what do you get for health insurance? They'll change badges right away, right?
Exactly. So you've got to make sure that there's a couple things. Is one, what you do in the government contracting space doesn't necessarily align with who you are with what services you're providing, meaning a company that doesn't work in the government contracting space probably has a lot leaner benefits than you do. And I think the reality is when the government moves one contract from one vendor, the incumbent, to another, they want to keep 95% of that population, right? The people that are doing work, they're happy with them. They want them to rebadge, reshirt, and come over to you. The reality is you can't have a stripped-down benefit program, so you got to really know your market, right? So that only means, hey, I got to know what they're currently offering, the incumbent, so I can be competitive on that. The other thing is hey, what are your teaming partners doing, right? Teaming partners, all working together on the same spot that you don't think they talk. You need to make sure that as you build your benefit program, that you're aligning with those primes that you want to work with. You want to align with those, other subs within there. So, I mean, there's a lot of homework that goes into this. It's, you've got your capabilities, right? That's what gets you in the door. But you got to make sure that your benefit programs meet what the government's looking for, so it's not a mass exodus because you came in with a stripped down benefit program and you're gonna hurt yourself on performance because you're gonna have turnover that the government doesn't want. And then the other thing is keep people aligned with who you want to partner with in your teams.
Well, Mike, that's so important because I've seen big teams that are going after, and maybe they're going after $100 million contract, and you as a small business may only have 10 slots on that. but you're supposed to match the benefit package of a Lockheed or a Jacobs, and it's so expensive, and it's almost like you're in a meeting with these big companies, and they don't get what this is costing you.
Yeah, and they don't. You got to remember, they have self-funded plans. They have all of the bells and whistles in there. I will tell you, though, that's one of the things that I think folks need to keep their eye on is the health insurance market. And I'm going to talk about medical the most because that is the 800-pound gorilla when it comes to benefits. It will be the one that costs the most. It will be the one that moves the most. But there are also things that are coming to market that can help you align with, insurance companies under the Affordable Care Act have modified the way they're delivering their benefits and some financial delivery models like self-funded plans for small employers that allow you to take advantage if you've got a good claims risk. I think you've got to evaluate all of those things that are out there on the table for you, and you can't be complacent with your benefit program. It's moving too fast. There's too many things coming to market. The insurance companies are bringing new value, so you've got to stay on top of those, and you've got to have an advisor that's going to be a partner with you to say, hey, there's something new coming to the market. We need to look at it because I think it's going to make you more competitive, help you retain business and win new business.
I think what you're saying is so important that you work with somebody that understands the federal contracting market because of the game that has to be played. And when you said self-insured, people go, oh, this is so cool, we'll be self-insured. But there was something I was reading on LinkedIn that a company was talking about the cost of Humira for one employee kind of blew up all of their plans. And I know that you're having to really balance what the medical benefit plan is versus the affordability to the employee, and also take into account what the prescription plans are and things like that. Could you talk a little bit more about that, Mike?
Yeah, if you look at where the costs are driving, the cost of medical care, right, that's going to the, getting your advanced imaging, that's going and getting outpatient surgery. That trend right now, and this is shocking because it's not, not what's happened with our gallon of milk at the store, right? It's going up 6 to 8%. We get into the pharmacy side of it, that's going up at 16 to 18% per year because of those high-cost medicines. We have some medications that are hitting, with our large self-funded clients. We see some medications like you indicated, Humira, $5,000 a month. Stelara for Crohn's disease, $22,000 every 8 weeks. You have to be able to deal with those costs. So you've got to make sure that when you look at some of these funding options that are out there, that you've got stops in place. And that's, making sure that you don't put the company at more risk. But what we're also seeing under the COVID, too, is we've had a lot of elective procedures that have been put on the sidelines. So some of our employers that are in self-funded plans are taking advantage of those basic elective procedures that have been kind of, put on hold while the COVID's been going on. So you've got to make sure that you are, your strategy matches where you're trying to go and where you are really in the spectrum, too. Because if you're a 10-person company, yeah, there's some self-funded options out there, but really where you need to start looking at it as a government contractor is I have 100, 150 employees. There's a lot of things that you can do in the self-funding that will help you off-ramp a lot of your expenses, especially if you have a good claims risk. So, but yeah, you need to keep looking at these wickets. And I see some large government contractors in the 200-300 employees that are fully insured that really need to be looking at alternatives that can make them more competitive. Because as you know, in government contracting, 1 percentage point difference in pricing, if you're technically acceptable, that could be the difference between winning a contract and losing a contract.
Well, you're absolutely right about that, because Matthew just posted a question about how do we keep a solid benefit packages with LPTA, lowest price technically acceptable, so prevalent within the IT, cyber, GovCon marketplace. And related to that, a lot of times you're having to get people that are cleared, they're going to be veterans, and it would be nice to say, if we had all veterans and they were all on TRICARE, would that be better for us? So, Mike, what do you run into with this?
I see a lot of clients that have TRICARE populations in there. You reach a point, though, that strategy can work for a while, but as you continue to grow, sooner or later you're going to run out of contracts to bid on that are going to be a high concentration of military retirees. So you've got to be able to, understand you're going to have a group health plan to be competitive. I think it is making sure that your plan aligns from a contribution structure, from a plan design structure, that you're giving the right list of benefits there too. So that's really where it comes into, hey, what is the market really, what do people offer in that market, so that you're not overpaying, you're not underpaying, that you've kind of hit that sweet spot. And that's just as business intelligence, right? What are the, at some level, with you indicated working with the large prime contractors, is you've got to align with them. You can get close with them, but it may cost you money, but it's just knowing what that needs to look like and only paying for those essential benefits, And we're going through this even with our large contractor, looking at alternate options. If you look at what the big companies are doing, you look at a Lockheed, a Northrop, they're going to have multiple fringe pools that they are bidding out for different contracts, and they'll use those different fringe pools to get aggressive for a specific contract. At some level, there reaches a point, I think, when the 400 or 500 person group needs to look at those strategies and say, hey, should I set up a qualified separate line of business so that I can be aggressive in this specific contract effort? But those are like all advanced strategies.
Well, you're right about those being advanced strategies, and we see these things happening all over. When you talk about pricing, it's fringe rates. And when I talk to people about what should your fringe rate be, I used to be able to just say, well, it's about 30%. 10% is payroll taxes, 10% is leave, and the balance of that is company paid health insurance and 401k match. Well, there's a lot of ways to play with that, depending on having the employer having the employee have a big deduction or something like that, but you can't keep people happy. And you're absolutely right. I've had people come to me and say, I need separate rates for these people are in a collective bargaining agreement, and these people are on this specific contract, and these people are out in California. So there are ways that you and I working together can find solutions for these companies to be more competitive. But you have to have good systems and good people to work with that can show you the ropes on how to do that. Because, Mike, you've been doing this for such a long time. The other thing that I wrote down when you first started out was tech solution. You've been working on some really sophisticated software for this, right?
Well, a lot of it is we've actually worked with a lot of the employer-sponsored plans, but we are looking at some solutions where we really can start to track that cost for the employer. Because I will tell you, a lot of accounting systems, the QuickBooks, and Russ probably can add to this, they're great for tracking expenses, but a lot of times they don't give a real clear picture to ownership and the finance team of, hey, what is the company level cost of this? You know how much you paid Aetna, you know how much you paid Cigna in total, but really what you're looking for is what impacts your rates is how much of that was the company's expense. So, we're looking at trying to be able to give that fidelity to the owners and say, hey, what does it cost for each one of my employees, for each person coming in the door? Because that's really what you're looking at, is what is the company's expense. And if you don't know that number, you're probably not bidding the contract right, and one of two things is going to happen. Either you put too much in there, right, and you're going to lose because you're not competitive, or you didn't put enough in there, and you're going to wish you didn't get that contract because you're going to be losing money on it when it comes in the door. So, yeah, we're working on some unique financial tools to help our clients really get a clear picture of where their benefit costs are and where they're going, too. Because remember, when you bid a multi-year contract, you've only got a certain amount of escalations in there. You got to make sure if you get 10 or 15% growth in that healthcare expense, you might go through that escalation and you might end up, year one may be okay, but year two, you might be in trouble. So those are things that you really have to understand your numbers. It's, like I said, know your market, know your numbers. Those are going to be the two biggest things that are going to keep you competitive and out of trouble.
Well, you're right about that, Mike. When people talk about bidding government contracts, and there's usually an escalation factor for the growth in wages, and it might be the Bureau of Labor Statistics, 2 or 3%. And people have to bid their rates consistently, because if you bid in that your health insurance is going to go by 12% next year, your bid's going to be popped out. You're not going to win it because you've put escalation on escalation. Well, if you don't win the contract, you don't have employees and you can't grow. And it's almost like I see companies going from one stage to the other, so they have to plan ahead. What do we do at 10 employees? What will we do different at 50? Because aren't there some rules that kick in based on size, and especially based on whatever we're calling Affordable Care Act these days?
Yeah, there's a lot of it's on the compliance side, just from a filing perspective. I think as you grow, I think you want to look at it just like you talked about. When you hit 10, look at it again. And I think the biggest mistake I see is anything that is number 2 in your budget should be something that is looked at continuously, at least at a quarterly standpoint. A lot of times with benefits, though, it's, hey, we look at it once a year when renewal comes up, and then we put it on the shelf and we don't look at it again. Well, the reality is if you go win a 50-person, if you were a 20-person contract and you just onboarded another 50 employees, well, guess what? That's kind of pushed you up that maybe I need to do a whole mid-year assessment. Do we need to do something different? And we've been fortunate that a couple of our clients, I mean, we had one that joined us last year. I think they were about 60 employees, and I think they've doubled in size in the last 2 contracts they've been awarded over the last 2 months. So we're going to be taking them through another process to say, hey, is what we put in place for you when you were 50, does that make sense now that you're 120? And so that, I think, is, and then you get into, like I talked about, then once you get above 120, 500 is another standpoint, or 250 is another standpoint, where you really got to keep looking at it. But you also got to understand the compliance aspect of it too, of, hey, what happens when I move to these new wickets here? I got, there's some reporting that has to happen, which obviously that's a burden on companies as they go through those thresholds.
One other thing I wanted to talk about was besides the benefit package, there's also tax rules, and there's something called a cafeteria plan. And companies normally don't get into that until they're about 25 employees. But what happens is if they sign it through their payroll provider, all they're doing is checking some boxes, not really realizing the implication of that. What have you seen in cafeteria plans that works and doesn't work, or have you got some thoughts on that?
I think for the most part, the cafeteria plan is everybody should have it in place as soon as they start off, because it allows you to do deductions on a pre-tax basis. So it's to the advantage of the employee. So I think really having a cafeteria plan in place right out of the gate helps you, because anytime you don't have to pay FICA and you don't have to pay the statutories and don't have to pay workers' comp, that makes you more competitive. You bring up a good point on, a lot of the cafeteria plans. I would like to pivot to, we've seen a lot of growth in the Service Contract Act space. And that's that unique contracting vehicle where you're required to pay an individual based upon the wage determination, but also provide a stipend to their health and welfare based upon the Service Contract Act. We see employers that, the employer can do 2 things with that. They can pay it out as cash in lieu. They can pay it through a bona fide fringe benefit program, which would be benefits. We've seen some employers that are making what I would consider a mistake in paying out that health and welfare as wages, which subjects the employer to FICA tax, that's Medicare and Social Security, which is 7.65%, plus the workers' comp. So they, if they're on a firm fixed price contract, they have just either, reduced their profitability because they're having to pay those statutory expenses, or they've reduced their competitiveness because they're basically have overpriced their contract. So we see a lot of folks in the Service Contract Act space and say, hey, we took an employer that was paying that out. The contract had grown to, a couple of thousand. They're saving $100,000 a month because they're doing it through a bona fide fringe benefit program. So, and we've seen, the Service Contract Act was kind of that blue collar, gray collar space, but we're now seeing it migrate into medical and into the IT space. So, for folks that are in those spaces, understanding how to, properly handle the Service Contract Act could be the difference between winning, losing, or increasing your profitability of a contract.
Well, you're absolutely right about that. It was so simple when we first started out as young people in government contracting. There was one contract and it'd have 300 people and you'd send one bill at the end of the month and everything was simple. Well, now it's so much more complicated. And when you bring up Service Contract Act, that's like minimum wage for different positions. When I first worked on a big cost plus contract, I was at Boeing, and we had a contract at Marshall Space Flight Center. And there were groups of employees that were mainly administrative and clerical that would get an hourly rate plus $2.56 at that time. It's now up in the $4 an hour range. But there was a lot of games on it. And the other thing that's changed over time is it used to be much clearer who was considered to be an hourly worker that would need to be paid time and a half for their overtime versus somebody that's a salaried exempt employee that's usually a professional level. What's happened over time is programmers and some of those higher end people now get different types of benefits. And boy, is that a big difference between a win or a loss in making an employer have to understand a lot about human resources rules, wage and hour rules, benefit plans, and also the personality difference of how a contract might be run when you have those things. For example, most of the time when I see a contract that has a lot of these lower wage positions, their fringe rate could be as high as 40 to 50%. Whereas if I have a bunch of IT people on a contract, my fringe benefit cost would be 25%. If people average those together, they're losing money or they're losing the contract. Mike, I guess you've seen all kinds of things like that.
Yeah, you see it. I mean, I've seen folks get in trouble for not doing the FLSA categories correctly, putting somebody as exempt versus non-exempt. That's where, and if you're bidding on a major contract and you've got questions about, hey, are these folks going to be exempt or non-exempt, doing it right could be the difference between, or doing it wrong could be the difference between that contract being a winner or a loser for you. And that's where I would recommend you go to somebody like Todd at Bath, Berry & Sims and get a read from them to say, hey, where is this going to fit in? Can we make these folks exempt? Because, we don't want to pay them, time and a half when they go overtime. In the SCA space specifically, if somebody is exempt, you don't have to pay the H&W obligation. And I'll tell you that H&W obligation at $4.54 an hour, if they're not falling to the executive order, that's upwards of $8,000 a year that is benefit-related costs. So getting that thing right is just absolutely essential, and you don't want to wing it because I tell you what, I've seen some folks, or you've seen the folks in the news that have gotten themselves in trouble by not getting that thing right, and they're having to write some big checks after the fact.
Well, you're right about that. It's the Department of Labor that does audits. There's a lot of lawsuits on it. There's coming back and it gets changed and people have to retroactively pay that. And it certainly upsets employees when their badge changed to a new employer and they thought they were getting paid one way and they're now getting paid another. And it certainly puts a lot of bad blood with a new relationship. So Mike, I'm so glad you were on with us today. You've been a part of our GovCon Summit community for quite a while, so I very much value you being on with us. And by the way, I think I told you today that we'll be doing GovCon Summit in April 2020 is our current plan, and it'll be virtual, so we're looking forward to having you participate with us. So Mike, just to wrap up, could you let people know how to reach you?
Yeah, you can reach us at Keystone Benefit Group. So it's you can go on KeystoneBenefitGroup.com, or you can find us on LinkedIn. And my email is just first initial last name at kbgllc.com. So we love helping government contracting companies. So if you have questions or you have a client that has a question, feel free to reach out to us. Like I said, we have either doing it right now or have seen it in the government contracting space, because as you start to work with government contractors, we just never want to tell them, no, we don't think you ought to do that. We just figure a way to help them make it happen and make it a reality, because that's the exciting thing about government contracting is you could be doing one thing, and that could be your bread and butter, and then you see, hey, there's an opportunity over here. Next thing you know, you're in a whole different line of work in a whole different area, doing a whole different job.
Well, and we don't need to talk about the differences by state. I tell people there are certain states I'd recommend you avoid, but if you want to go there, let's make sure we cover ourselves. So, hey, thanks everybody for being a part of Freedom Fridays today, and I'll see you guys next week. Have a great weekend.